Alright, we know what we do. 5 minutes a day over time will make us dangerous, so I'm going to go to CNBC real quick. I'm so far behind today, I could not even tell you. I stayed up late watching that Royals game. Dow, S&P posted biggest gains in 6 months. 21 points up, 21% up today, 1.12 over the last 30 days, it looks like. But let's look here. Stocks rally on payrolls. I don't know what that is, but we'll let that ride. So let's go here and see what this is talking about. So you're not seeing the pre-markets. I'm not even going to do that, but we'll do this down here. I'm sure there'll be advertisement popping up. U.S. stocks surge on Friday with the Dow Industrial jumping 200 plus points after, let me mute this real quick. After a better than projected payrolls report bolstered a positive view of the United States economy. You can ask for a better looking jobs report. The market had been getting it a bit frazzled, and this is the kind of report that eases those concerns, says Jeff Greensberg, senior economist at J.P. Morgan and Asset Management. And the fact that we are seeing acceleration in job growth makes the Federal Reserve officials very comfortable ending quantitative easing, which we talked about that before, which is basically increases in interest rates later this month, adding Greensberg referring to the central bank's asset purchases on track to end in late October. So let's see what the nerds are saying. Let me unmute this real quick so we can get back to the nerds.
For the markets, better than expected non-farm payroll reports, jobs growth, unemployment rate below 6% at 5.9%. The only thing lacking is real wage growth, but other than that, the markets are quite happy.
Well, half of this celebration is relief about Europe. The futures were up about 90 points before the non-farm payrolls came out. So I think that they're breathing a little bit of a sigh of relief, but we do have some interesting components here. They're slamming gold, but more importantly, they're slamming oil very badly, and that has allowed the transportation stocks to get past the Ebola scare, and airlines and others are kicking in pretty good here.
Transports are up 155 points. That's a great day, and you're right. Logistics companies are up, railroads are up, airlines are up, truckers are up, right across the board.
Yeah, no, it's a good deal. And there is a little background anxiety here, though, not playing into the market. This evening starts Yom Kippur. That may be tempting to a terrorist group or two to try and mark something. So there's a little cautious anxiety going out here. But all in all, a good day, a real sigh of relief rally.
And considering all that the markets had to deal with, so we've had the China slowdown, the Europe slowdown overlay that's been there for a while. But this week we had a few more curves thrown at us. The intensification of the Ebola concerns, intensification of the democracy protests. These are things that weren't on our radar even a few weeks ago that were here. And the market still is handling another crisis now. And the Syria thing keeps going on.
Well, but again, it's a sigh of relief. The Hong Kong demonstrations are muted, fewer people. There's an overture for discussions. The Ebola thing, they're isolating people, a much larger group than we originally thought, but they seem to have people isolated and quarantined. So some of this is dissipated, and that's allowing for the sigh of relief. Now, the real thing is, let's see if we can kick it into high gear and break out of that resistance we were just talking about.
Okay. There you go. So there you have it. So you know that the markets are up, and that's pretty much it. You can kind of look at that at your own to see where they ended out for the day. But, well, let me at least go there. Let me go there so I can at least see where the markets ended up for the day. And then I'll quickly go over to the portfolio. So where did the S&P end up with all this hype? It's at 1946, up 21.5 points, and 200 on that for the Dow, so that's pretty good. All right, I'm going to show you what I end up doing. I end up getting a little froggy here. This is crazy. I'm up 15% on my portfolio, and I'm going to show you the reason why I'm up 15%. I saw yesterday that this company that I thought was Adidas, which is not Adidas, it's actually Alliance Data. I saw that they dropped down to some crazy number, which is $240 a share. Okay, so what did I do? I went out there and I went bananas and bought 500 shares of this. And so not only did I make because I bought it at 240. So now here I bought it at 243. So at 243 it went up to 251, and I made the $900 that I lost back plus some. So you better believe I'm selling that. That's a done deal.com. So I'm gonna go ahead and sell that right now. Alright, so now I made money on the stock. Right, so I made my money and all that good stuff. So this here I bought at 240, and I ended up making $5,000 today just on the move of this stock, which I'm up about, I don't know, probably 4.5% gain on the day. I am not going to hold on to this. I'm going to take my $5,000 and sell and get out. So I've made about $6,000 today on those two moves, and I'm out. So I'll go find something else that I can do, but I'm up 15% on my portfolio, so I'll keep you in a loop on some other stuff. But that's pretty much it. I may play with some stuff over the weekend, but I made my money. I'm out. I actually made more money on that Alliance Data double up move than I did with Procter and Gamble that I've been holding on to for a while. So that's all I got. Have a great day. Go Royals. Go Royals.